here we are. We are going to be covering that we had talked about markets being short-term oversold from the original bull correction. As you can see in the S&P financials, what part of the gimmick is my MMTs is they will buy back, buy to cover. It gives the broader indexes some stability in the S&P. Even though this is not a 20% weighting as it once was, it's about 6% weighting. The Nasdaq banking is another thing that is kind of a mixed bag, but they're coming into these areas here to short cover, and they were the ones that were a big contributing factor in part of this last correction. So when we take a look at KB banking, this is like Bank of America, Capital One is in here, Northern Trust is in here, PNC is in here, Zion Bank. So USB is in here, and the short covering, nobody in their right mind, what financial uncertainty and regulatory right now is buying these, would buy to hold these. What this is that the short sellers are taking profits on these beaten down banks as they are, and that's what's given the broader indexes today here their move. So they do that, and I wouldn't be a bit surprised. Let's go over and take a look once again. Let's take a look at the ag stocks today are also in the fertilizers that we cover. They're pretty positive across the board because of some of the data that came out this morning. In the restaurant sector, well, it's so-so, but once again, you start to see where the oversold conditions are is also where smart short sellers or smart bears are going to have to take profits. And like I said yesterday, and I said in pre-market this morning, is that bear better be careful because short term is short term. And short term oversold means that you're going to get people who buy to cover on the institutional side of short sellers. In the retail area, well, let's go into cyclicals today. Big part of that move right here that's in these indexes today is coming from these cyclicals that were beaten down. And you can see where the Cat's in here. You got Hewlett Packard in here, but that's been a drag on this thing. We don't even trade that thing. But the thing about it is you got a mixed bag of cyclicals that are leading the way here. And it's part of the overall move. FCX, nice little one in here. Here's some of the bigger gainers, though, but it's all broad-based in that cyclical area, which is part of that oversold bounce. And the majority of it, my friends, would be short covering, okay? On the consumer side, where it was getting beat down, is on the consumer side, Morgan Stanley consumer side, McDonald's is doing well again. You've got these consumer side stocks. They're coming in. They're buying shorts. Some people are nibbling because they're oversold. So you're going to get a broad base. And we've already had some of these very broad bases early in the week, last week, but we need to know where they're coming from, and they always come from those areas that are the worst. Now, we already looked at cyclicals. The retail sector, once again, this is all your retail stocks that were so overbought that had a correction. They trade different than any other sector, though. So their short-term oversold is people keep coming back in here because now that the Bernanke news is out of the way and everything, and they're all preaching 4% growth at the end of the year, sorry, dong, ain't going to happen. And it won't happen. But once again, that sentiment combined with short-term oversold is what gets these rallies right here. And this retail sector is always one to know. Now, when you get into technology, my friends, and you get into the credit first technology thing, technology is weak this time of year. And it too was a big contributing factor from that short for about 6 weeks. 5.5 weeks, and you can see where that broad-based buying is. They're coming into technology, but technology is normally weak, and they are weak, but people are buying to cover because the bear gets frustrated when they don't keep going down. So you got to figure out what we figure out here. Well, what is the real net buyer versus that short cover buyer who's been short several weeks, and now it's time to take money off the table in the short term. Why is it? Because the thing of it is, my friends, short-term oversold creates these kind of bounces. Now, in the disk drives here, SanDisk, you know, a little bit of green across the board. The most important one is that Dow Jones Internet Conference, all green. These are where the eBays, the Amazons, the Netflixes, the Pricelines, the Niles, the Yahoos, and whatnot. But once again, it's not a strong sector. It's a green sector, but remember, it's going to take some doing. And normally these sectors here get, you know, after we get in the earnings in July. So let's take a look at the GSTI composite. That's where you got a slew of stocks in here that once again we can see here clearly where this broad-based buying is across the board. Now, when you get into the hardware sector, that's your players in the hardware sector. It's a little bit, it's green, but it's not where the big buying is taking place. There's some short covering, some nibbling going on here, but this is a big contributing factor that led the market down. Now, interactive weak internet index, Akamai is in here. We use those technologies. You got Amazon, you got the Baidu's in here, Broadcom's in here, Cisco, Digital River, eBay is in here, Netflix, so Juniper is in here. This is an area that is always seasonally weak this time, but you can see that it's not the strongest sector, but then again, it's making a move. The Morgan Stanley Internet sector, which is a different listing of type of diversified stocks, not a big, great mover, but you can see where some of that's coming. Morgan Stanley Technology, again, technology is weak, and technology should be sold short after these rallies. That from oversold, short-term buyers come in, short-term that the bears start to buy to cover. However, we still remain weak in these sectors. They will have to deal with their earnings in July, and it's all about short-term overbought, short-term oversold. But another thing that's given what we would like to look at is these transports again, which have led the Dow down. Now, these are always bounces and people nibble and whatnot. Remember, short-term macro oversold is what you're learning about today's move. We covered that yesterday going to the close, that you're going to get a short-term oversold bounce and that the bear itself would have to be careful, and what fuels the moves higher is when they got to buy to cover. At Nasdaq Transportations is something we want to look at. It's the TRANX. Transportation. Well, everybody says we're going higher. Bill Gross says that this economy is blankety blank. That's the bond king. His little partner today was on Squawk Box this morning and said that economic data that's coming out is useless, worthless, and weakness. And they're not bullish on any of it. And the thing about it is, short-term oversold will have these bounces and bull reversals on certain kinds of days. And it's very good and very, very skillful way of learning how to get long on these kinds of days. Don't expect it to be every day because there is no evidence. Let's look at the Dow Jones utilities. Utilities are kind of light in here, but, you know, you got Duke, you got Edison, you got some of the, you know, stocks in here that people like to buy on a yield. Not a big mover, but still a contributing factor. And one of the other things that's going to be important is to take a look at the airline stocks. Again, you've got some people wanting to buy airline stocks. Who's going to want to buy airline stocks? Things are slowing down. I don't find where you can buy and hold that stuff overnight. It doesn't matter. What matters is short-term, oversold, short cover bounces. Let's go to the semiconductor, Philly Semiconductor, which is finally getting a move. And the thing about it is, this week, June and July, until you get back to school, these things are weak. And they're even going to be weaker when we get into the earnings season in July. But semiconductor devices, not much move. But the capital equipment semiconductors are moving more on a percentage level. So basically, part of the tricks down there is to hit those futures trades, which make stocks go higher automatically, artificially in price. Does it mean that there's really a lot of buy-side volume through this? No. Now, let's get over to the healthcare. Morgan Stanley, healthcare. HMOs are getting a nice move today. That's a big contributing factor in here. These HMOs with that tape right here and how markets get support. When you take a look at the casinos now, they're not doing all that great. Wynn is always the one that is the most tradable in this whole. It's the leader of all of these stocks, and that's the one that we trade. The rest of them, forget about it. All right? But you can see it clearly. And the thing that I like to really teach people is that we are going to go in here to the telecommunications, and we're going to go to that Nasdaq Telcom. And we showing it the other day, and you got green, and you got lots of people short covering and people buying in oversold condition. North Telcom, you know, some of the bigger ones, they're not doing much. But more importantly is, let's get over here to the energy patch. That gold and silver is a mover today, and that's short covering, because if you go back to the website and you look at this walk around Wall Street and all the sectors and indices, these were all red. Now they come back with volatility, buy to cover. That's what gives market support. You know, they're not going to go straight down when they're oversold. They're going to go from an oversold condition back up for a couple of days before they roll over, okay? Now, let's take a look at the commodities. This is that trade that everybody's been on since the last couple of years. And the thing about it is, you can see that broad base, and you've seen it before when we do these things. Let's get into the energy complex. Deutsche Bank Energy. They're coming way big in here. This is where some of those like Baker Hughes and BP and ConocoPhillips, and you got a good mix. You got NE, Murphy Oil. You got Hess. Hess is the leader in here. Hess, H-E-S-E-O-G. What did I say? They were all red. They were all taking bloodbaths, and now is a buy to cover. The public doesn't understand buy to cover. They think it's all glory. No, it's not. They're taking profits from their shorts. Let's get a grip. Morgan Stanley Oil Services. There it is. That's part of the tape. Some of these are in that Dow 30. Okay? And the S&P, some of these leaders that are in some of these key sectors are also in the S&P. And financials is helping it today. Anybody that wants to buy financials, go for it. You're going to pay a price. Here. We're going to get into the oil services. Right here, you got the Halliburton. You got the NBR. You've got OII, which is always a good little mover. But you can see Baker Hughes is in here again. So you can see where the index in our sector indices are weighted and where this is all coming from. Biotechnology. Let's just take a look at the Philly Biotech Index today. First, I'm going to the drug index. So there's a little bit of buying there, but it's across the board. Nasdaq Biotech, all of the biotech stocks from A to Z on the Nasdaq is you're getting a bid. And everything got short-term oversold. That brings people off the sideline. Does that mean that the trend going down is over? That is yet to be determined. Because let's take a look at Morgan Stanley Biotech. That's this one here. And you know, all the NAs mean that they're not there, but there's a little bit of buying. So it's broad base. And the thing about it is, we've covered the areas that need to be covered. We will take a look here at the Dow Jones Industrial Average, where this is that DJI that we cover. That's this right here. That's that 125 points. These are the stocks that are making the move right here. Right here. And basically, a lot of these in here, McDonald's is in here, you know, they were short-term oversold. And so they're buying to cover, and they're using futures to create prices to go higher. Let's take a look at the Dow Jones Composite itself. This is the DJC. Once again, short-term oversold brings buyers off the sideline and short cover buying in play. JP Morgan, Goldman Sachs is doing well today. As a matter of fact, what we will do is take a look at the S&P 100 so that you can see the large cap in play here. And that S&P large cap, now this is called S&P 100 now, OEX.X. And it's a slew of buyers and short sellers coming in to buy to cover. And that's part of the broader move today. And you always like to see these, but every time that they come in and do this short covering, this broad-based buying, as you've noticed over the last several weeks when we go through these things, they fail and go miserably lower. It's just that we've reached a point of oversold conditions. As we said yesterday at stockmarketfunding.com, you can see the S&P 500. Let's go to your mid-cap 400. You got buying in the mid-cap 400, and whereas in price volatility, you're not just going to go straight down. And the thing about it is people will come off the sideline in oversold conditions. The SMLX.X, this is that small cap that's been beaten down and has led the market lower. And let me tell you, small cap is in trouble, because the U.S. government is not doing nothing to help this small cap. And the thing about it is, you're going to have these broad-based days, just like you have broad-based selling days. That's what makes a market, and that's what makes price volatility this time of the year. Auto parts, we didn't quite look at, but let's take a look at those global auto parts. Right here, they're buying. And these are the ones that are contributing factors in here. And we know all the leadership. Let's take a look at the people who make automobiles. You got a little people buying. Anybody want to buy Toyota Motor right now? They got to be, hey, I'm not even going to say it. The best leader in here will be Ford, okay, at certain times. GM is up a little bit today. So we can see where the buying is, and using financials and covering and doing all of these things is what they do. Like I said, the software you would think would be better, but software this time of year is also seasonably weak. And the thing about it is that you're not going to go straight down. You will have overbought and oversold areas. This is where the tape, this is what's contributing to the tape. And we'll stay on this, because the nice thing about it, MMTs, is you'll know where the net selling has been from week to week. When we do these things, this is why we update them to go through these sectors. When you take a look at the intraday high count today, look what's leading part of the high count. I mean, RIM. RIM is so beaten down and oversold that you're going to go higher. So when you look at the most beaten down, oversold stocks, some of what we went through yesterday, these are the ones that are getting a bid, and they're the ones that are providing the short cover rally. I'll do a separate video on the high count, but I just want people to know that you will have short cover rallies and bull reversals. You will have short-term macro oversold, that you take advantage of those long sides. As I said clearly yesterday after the close, the bear got to be a little bit careful, because if he's not, he's going to end up in one of these days, and this is what gives market support on a daily level. There's the intraday high count. Now when you get to the low count, well, you got some in here in the low count, but not that bad compared to that intraday high count on the Nasdaq. And here are your most active. And your most active stocks, Cisco in here, these are all the culprits now. NVDA is in here. I mean, these are the most active in volume, most actively traded. And we'll do that in a separate video. So right now, we've covered the sectors. We've covered what the trade is. Everything we said in pre-market this morning on Stock Market Funding, everything we said in MMTs, everything after the close about being short-term oversold. The thing about understanding how weak that this market's really going to be is that oversold bounce is very short-lived. We'll know tomorrow people want to hold stocks overnight into the weekend on a Friday.